It is our great pleasure to invite three leading FinTech experts, Mr. Alex Medana, CEO of WIP Solutions, Mr. William Ross, partner of NEST.vc, and Mr. Paul Schulte, founder and CEO of Schulte Research International, to share their views and insights on the impact of FinTech. In particular, the potential disruptive role of blockchain on financial markets and institutions. We are also very pleased to have Professor Veronique Lafon-Vinais, Project Director for the MSGF program and Associate Professor of Business Education at HKUST, as the moderator for today's discussion. Thank you.
Okay. Now, I'm really happy because these three fantastic guys on the panel are good friends of mine, and I know this is going to be a fantastic session. So I'm going to go, much to my friend's grief, through a few very, very short slides, just set the background. We're talking about FinTech, right? So tech. When I started working, as I tell my young students, some of you are still in the audience, this is what I started with, right? I had a mainframe computer in the bank, occupying a room about this size with less computing power than your phone. We had a phone that looked like this. Some of you may never have seen one like this. When I showed that to my son, he said, "Mom, this is not a phone. What is this museum thing?" Right? And we had a telex that looked like this, okay, sort of combination of typewriter and telegraphic stuff. And then we had something that you've all forgotten about, the post office. Okay? And guess what? It worked. Amazing. So, we're all going to talk about how technology is disrupting our world. So talk about disruptive technology, and this is something I borrowed from my class as well. So if you think in terms of technology that have disrupted the financial industry, okay, one of the most profound disruption came with the fax machine. The humble fax machine. It allowed us to transmit information instantly, when it used to take months to ship it across the world. Then we had the personal computer. So all of a sudden, you get all of this at your fingertips. The internet. We're still processing the impact of the internet. As I tell my students, when I was their age, a long, long time ago, as you can see, I have a lot of white hair, I had to try and find the information. I had to go to the library. What if the library didn't have the book? Some of you are nodded. You know what I'm talking about, right? What these guys have to do now, they have so much information. Completely different ballgame. And then we have the mobile internet. So this is compounding it. Now we are being flooded with information, okay? So what's the next big thing? We have things like wearable technology, artificial intelligence. And of course, we're going to talk about Alex's favorite subject, which is, I'm not telling you, he'll tell you himself. Right, so I had most of my working career in banking. And this is what banks looked like in my grandparents' time. This is what they look like today. Okay? Big changes, and quite frankly, the sector was ripe for disruption, and particularly the payment sector. In fact, interestingly, before I became the MSGF project director, I was also advising to some of the groups. Back in 2014, when I first became the project director for the MSGF program, one of our groups decided they were going to do something on blockchain and Bitcoin. Actually, it was not blockchain, it was Bitcoin. And then they came up with this amazing report back in November 2014, which I unfortunately didn't include it, but they did research on what about the use of Bitcoin for payments. And they had this one chart that looked at the cost of transaction for consumer transactions in payments. And they calculated that about 6.5% was the cost through banks. 3.4% through money transfer operation. But if all payments went through Bitcoin, it was only 0.3%. So when they produced that report, I thought, wow, isn't that incredible? So that's what got me thinking and what led me here to these guys. So disruption was expected. And we think that blockchain is going to be a big game changer. If you look at my friend Will's area of expertise, it's the financing of all that stuff. So fintech financing, I pulled a couple of slides to show that it's exploding. And there's room to grow. Because Asia and China particularly still has major room to integrate more access to the web. What about artificial intelligence? Financing is growing by leaps and bounds in that area. Are we going to see the rise of the machines? This is scary to me. Yeah, I'm very old, I'm a tech dinosaur, and when I see this kind of stuff and artificial intelligence, I immediately think Terminator. Right? So this is kind of scary to me. But we're not going to talk about that. I am going to ask our panel of experts to step in and actually give us their views on things. So the way we're going to play this, I'm going to ask each of these amazing guys to talk for a few minutes on their favorite topic. And then after that, we will have a panel discussion. And I will invite you to throw them, not me, I don't have the answers, throw them the questions anytime you want. Okay? So I will start with, somebody has brought slides.
I'll do slides.
Guess who it is? Of course, it had to be Paul because he was a professor. He's been a professor with us, an adjunct professor for years. So, on to you then.
So what do we do? Okay, so what is FinTech, right? FinTech is this. This is my favorite chart. FinTech is when you are gluing all of your needs for finance onto your social network. One of the reasons why it's so problematic is that banks don't know how to do this. And in many ways, banks are forbidden to do this. They're prohibited from doing this. That banks are in the regulatory doghouse, and they're having a very hard time trying to do the things that come naturally and genetically friendly for Alibaba, for Tencent, for Amazon, for Google, for Apple, right? And so I'm going to make a case today that I'm solidifying in my mind that banks are going to be bypassed in FinTech. The people who are going to do this are the technology companies. And that's why you need to do an interdisciplinary program, and NYU has cottoned on to this. NYU was the first program to say, we need to jump into the technology angle because we have all too much financial and no technology. We need to have more technology and less financial. So this is where I want to go today. And it's not just what Veronique was talking about in terms of the internet. We're talking about sensors, right? Does anyone know how many sensors there are in all cars moving today, probably within the next 12 to 24 months? Anybody want to have a guess of how many sensors are in all cars in the world in the next 24 months?
Over 100?
22 billion, right? And each individual car has around 200 minimum. And your cell phone has somewhere between 8 and 20. And so we're talking about sensor technology on top of the technology, which the best of the best are grabbing onto. And this is becoming a very easy thing for companies like Alibaba to be coming onto. I want to talk to you about Internet of Things, because this is where the next chapter is. We're already past the FinTech chapters over. We're on to the Internet of Things. And so I really want to focus that today in terms of the kinds of companies that are creating financial empires without a single physical building, right? M-Pesa, we know. Gojek has 2 million customers and has not a single building. And they ride motorcycles. Ant Financial, I just spent last all-day Thursday with Alibaba in Beijing. The stuff that Ant Financial is going to do will blow you away. This is going to become one of the most interesting companies in the world. Rakuten, the 4th biggest bank in Japan, nobody's ever heard of. Bcash, 80% market share for the 6th most populous country in the world, in Bangladesh. They have 90 million customers, and the company's 4 years old, and it's started by 2 brothers. And one of the brothers went and lived in Nairobi and watched M-Pesa, went back to Bangladesh, and built the company in a couple of years. They have an 85% market share in Bangladesh, and so forth, right? So this is what I want to challenge you guys today. So I was thinking, what are the Internet of Things challenges? The first one is optimization of physical assets. Physical assets, every physical asset is going to have a sensor attached to it in the next 5 years. And so how do you deal with this as a field? It's called logistics. Now, my question to you is, can a banker become a software engineer who understands sensors, bots, and artificial intelligence? Answer, question. I think answer, no. Second part, tapping into previously offline operations. This is called digitalizing the network. Can a banker become a hardware engineer? Answer, I don't know, probably no. Third one, real-time and actionable insights in terms of research and intelligence. The Alibaba research is an entire building now in Beijing, 7 stories, blows you away. There's not one single sheet of paper in anywhere that I walked. There's no paper in this building. And so the question is, can a banker become a data analyst? Fourth part, anticipation, detection, and control, right, of operations, right? And can a banker become an industrial engineer? This is what you need to become in the next 5 years, because the job that you're going to have in 5 years does not exist yet. And so NYU and UST are glomming onto this. The integration of computer engineering, logistics, industrial engineering has got to be married to finance, or we're going to be in trouble. And I've been talking about this a lot, and I think the traditional MBA has to be radically altered very quickly. And so the introduction of this FinTech courses from the NYU program is a great way to start. And then lastly, this is your old, your old sense of understanding ratings. Wait till you see what Ant Financial is coming out with in Sesame. Sesame is going to be an automatic program for guaranteeing your hotel room anywhere in the world, your Sesame rating score as a Chinese person, guaranteeing your auto rental deposit, getting you your visa in almost any country in the world within 5 years. That rating will be your rating, and it's an app on your phone. You can see your rating automatically every day. It's there, 650, 700, 720, 750, and so forth. And then lastly, I would say to you before I move on, FinTech is already taking over the banks, you guys. I've been covering banks for 15 years, and what I see in front of me is a world where this is a fait accompli. The banks I don't think the banks are going to be able to catch up. And I believe more and more that Alibaba, Ant Financial, Tencent, Zhong'an, this Zhong'an online insurance company in China is going to become the biggest insurance company in the world. Ping An, Alibaba, and Tencent JV with CICC, Morgan Stanley, unbeatable. It'll be pure online insurance. This is going to cause an extinction of agents. So don't become an insurance agent. Don't become a back office person at HSBC. You're going to be in really, really big trouble, right? The integration of these different degrees is a vital part of the next step in education. And we're only at the bottom of the first inning, I think. So I'll just stop at that.
After 16 years in banking, I've realized that everything I've touched, so I'm kind of a back office, middle office, whatever, ops person, front to back, back to front, all asset classes. And after 16 years, I realized, F word, right? There's something called AI, there's something called blockchain, there's something called big data, and so forth. And all I've touched will disappear. So that was my moment. And then I calmed down. So that was over a year and a half ago. So I still believe, and I'm with you, but it won't happen tomorrow, right? So we still have work to do. We still have jobs. By the way, on FinTech side, it's not spooky. There's a lot of things to do. Disruption, I have a kind of a way to think about disruption. I don't really believe in disruption in a negative way, right? It's a positive. It's we're making things better. I believe in disruptive technology, and blockchain and other things are partly disruptive in their opportunity to change the way we do things. So what does that mean? First of all, blockchain, there's a lot of hype, there's a lot of not Bitcoin, but bull, attached to blockchain. Blockchain, in very, very simply, is really to put a record together, right? You validate and you have one piece of record that you distribute across a network, right? So you are more intelligent than me, and we all understand that, right? It's very, very simple. Think of a database where we disseminate one piece of information. What does it mean for records, keeping, sharing, big data? I believe that blockchain, to me, is the precursor of big data. Because now, and it's today, it's not in the future, though, disclaimer, blockchain hasn't been fully scaled up. There's many types of blockchain, and we have to look at that. I do not believe in anything that has to do with cryptocurrency, Bitcoin, and if you looked at Ethereum in the last 2 or 3 weeks, the DAO had a big problem. Look at the news, but what was it, 50-odd million disappeared into a child DAO. So there's problem and other problems. But what it gives us the opportunity, to play with data. There is, and I'm fully with you, it's driven by China. The question mark is whether China will be able to replicate what they can do today outside of China. So as a French guy, right, even if I left so many years ago, data privacy is a problem, right? In China, I can give you access to my social media feed, and you credit score me, you give me loans, you give me a car, whatever. Go to Europe, no, cannot. So that is something they will have to adapt, and I guess joint venture will be one of the opportunity. So to me, there will be, and there is a convergence of few things, and they are all buzzwords today. Think about IoT, big data, AI, blockchain, machine learning. Everything today is about AI. I've talked to somebody, and I need to understand what it does. Peer-to-peer payment system on AI. What does that mean? I don't know, but you don't need AI. You don't need blockchain for certain things. So what will happen? Two things. Conversions of all these buzzwords for two things. Data, right? Because then we know what we can do with data. We can start to monetize it. We can start to pipe it. We can start to create new assets. And blockchain underpinning that. And then digital ID. And that's a very, very powerful construct. Because in the very near future, I can own myself. Now we have to define me as well. So what is me? There's my CV, there's my blood, there's my gender, there's my criminal record, if I have one, there's my diplomas, there's my sports achievements, whatever there is. And then I can start to distribute me, I can start to own myself, right? So through a smartphone, through an app, I can distribute me to insurance company, to agents, and so forth. And that is very, very, very powerful because the control is back to me. I own myself. Again, going back to our country, I can not own my my medical records. I cannot have a view on my medical record. Maybe it has changed. I've left 15 years ago. But this is crazy because it's my history. Going forward, you have full transparency. You have full openness. The flip side of that, we need to think about, all of us, it's about data privacy and what it means, right? What it means. And I will shut up and put up for now.
So, if a nation in Europe votes to leave the Union, will a startup in Hong Kong hear if a tree is about to fall on its head? Sounds like a bullshit Buddhist koan, right? Right? But why do I bring that up? It's because of the interconnected nature of all of the things we've discussed thus far. What is Brexit? Brexit has a lot of political applications, but at its core is a voter base who have been failed by globalization and have not benefited in the implementations of the technology we're talking about. People in Wales are hoping that with Brexit, they'll reopen the pits. Guess what? It'll still be cheaper to import coal from Indonesia. So if you want to pay higher electricity fares, fine. But that's going to be your cost. These people are not alone limited to the north of the UK. We can explain the whole Trump phenomenon in very similar terms, where globalization is a terrifying factor, where technology, it's the rise of the machines. And for me personally, what's common in these cases is structural unemployment. And I'm not afraid of AI, I'm not afraid of bots, I'm not afraid of robotics, but I am afraid of the structural unemployment that they can possibly create. So what does this all mean? I agree with Alex. I'm not necessarily a Schumpeterian in terms of disruption. I think the most basic form of disruption for any business is whenever your competitor gains a competitive advantage in servicing the needs of your mutual client. The most basic form of disruption is price. Same products, same utility, same specifications, cheaper price. That's why Walmart's the biggest retailer in America. What this means, and what this means for these businesses, and what it means for us as investors, is that it is not a technological arms race. It's not about trying to guess whether A is more sophisticated than B and ultimately more impactful than C. Because frankly, the most sophisticated technology does not always win. We've talked about a lot of utopian things, but ultimately the most important part of the technology is the investment. And so is the investment, but also the customer use case. And this, going to Veronique's question about finance, if you look at the tick up in her slides of the amount of investment that's occurring in companies or occurring in venture capital space in Asia, it's being driven not by Sequoia. It's not the traditional US VC model. It's being driven very much Tencent, Alibaba, Rakuten, corporations who have VC arms who are developing or investing in startups to whom they can upsell those products or services to their existing client base. That's a big difference, right? Silicon Valley is dreamed up by a professor at Stanford called Fred Terman. What's his basic idea? Is to create jobs for GIs returning from the Second World War. And he encourages his students to create businesses to supply those jobs. His students happen to be people like Mr. Hewlett and Mr. Packard and others talented sorts. But it was a job creation exercise premised upon a research budget coming from the US government, right? And we know the internet, GPS, Tang, pencil, ballpoint pencil, all of that came out of that. That's been very much a push-down innovation model. Asia Pacific, we do have that spending, but not in a way that's being commercialized or is commercializable. What we do have instead are literally billions of consumers who have mobile phones, who have smartphones, who have an increasing penetration of the internet utilization, to whom services can be delivered. And this is the key, and this is the vector, I think, and this going to what Paul was saying, why it's so important for companies like Alibaba or Tencent to be recognized as leaders in financial services is not just that they have the back office agility to cut the data, to provide regulators with risk-weighted asset calculations. They also have the relationship with the consumers to be able to begin to proffer those services. So all of the things you've heard from the guys are true. We are at a tremendous inflection point, not only in terms of the application, but also who are the ones who are the leaders in its ability to be realized. And those are the ones who have the incumbent relationships, not the incumbent businesses, the incumbent relationships with the customers to whom they can provide that additional utility. And our specific wrinkle in NEST is that that's what we're trying to do in terms of our investments, is bringing together startups to whom a service can be upstreamed or distributed through a corporate partner, and through that identify companies we can invest in.
So I could just jump into, so here, by the way, here's Ant Financial on the slide here, and this shows you where Ant Financial is going. Ant Financial is, I believe, I spent the whole day with them on Thursday, and Ant Financial is further ahead than any other company in the world, even Google, Apple, Amazon, eBay, any of these. They're much further ahead. And exactly what Will was saying is, why are they ahead? Because there's no there there. There's no entrenched interests who are blocking the progress as there are in the U.S. There's very powerful interests in credit card companies, in banks, in many other interests who are very powerful in Washington who block a lot of this, and there's no there there. And that's why these things are starting overnight in Indochina. What's happening in Vietnam, Cambodia, Laos, Indonesia is astounding, right? If I was 25, I'd go to Jakarta. I started my career at 25 in Jakarta, and if I was 25 again, I would go to Jakarta or Beijing, right? Even Travis Kalanick, the developer of Uber, said there's 3 bays. There's the Bay Area, there's Beijing, and there's Bangalore. And there's no other bays. And he really hit it on the head. And the other thing, too, is, Alex has a good point, too. Don't be afraid. For God's sakes, don't be afraid. This is incredibly exciting and interesting and fascinating. And it's a time to change and learn. You guys are all young. The people who are in their 40s are paranoid, right? And these guys are going to have to go back to work and learn. And I went back to work and I learned, and I wrote a book about this, and I taught myself how to. It requires humility, because the stuff that's coming at us is coming at us so fast. There's no reason to be afraid of it. There's every reason to be joyful and adventurous and excited about this stuff. It's really, really interesting. And by the way, it is crap that that technology has taken jobs away. FinTech, a calculation I saw, has added like 3 million jobs, right? So there's a lot of jobs that have been added in Hong Kong, right? Don't forget. But I do believe that the banks, in terms of employment, are way past their peak. HSBC and Standard Chartered are going to have to structurally shrink for the coming years. And so you should not pin your hopes on getting a job at these banks. You should pin your hopes on getting a job in some other interesting company where not only do they have startups, Alibaba's hiring smart people and giving them very good salaries now all over the world, right? And so is Tencent. These companies are maturing. Ant Financial is going to be on a hiring binge for the next 5 years. So I wanted to throw that out there as well.
I guess to echo Will, the disruption to me is only one is with the relationship to the client, right? So the banks are losing that relationship because you have robo-advisors, you have, and I can talk for hours about robo-advisors if you're bored. So there's insurance, and they are entrenched by startups just for the relationship. So what you have the model that you described, which is a utilization of banking, right? A bank is just a big pipe. Look at PSD2 in Europe, whereby as a bank you have to open your backend as an API to any service provider, to any other client. So you lose that client relationship. And that is a big thing, right?
I think, to echo Paul's comments about the opportunity in this, I think that's true. And I say that emphatically. For me, I'm a classic Canadian liberal. I cry at long-distance commercials. I'm always, immediately opposed to anything that's going to come off Fox News, right? So, but nevertheless, I genuinely believe that there is something exciting here. And the way I look at it, because the thing that's most important to me being that sort of bleeding heart liberal, is the job creation vector. There's a reason why I cited Fred Terman. So unfortunately, I can't mill around after this presentation today because I've got to run off to a meeting with a Middle Eastern government. But talking to this Middle Eastern government, they're very interested in creating their own ecosystem. And it's a very similar aspect to everybody else trying to create their own version of Silicon Valley because they want to produce their unicorns. But the thing that's really curious in the conversation is we've talked about not just addressing unemployment, but participation. So once upon a time, I had the pleasure of hearing Michio Kaku, the physicist, talk. And he was talking about how in the future, there would be 3 key things in business. One would be brand, the second would be customer service, and honestly, I don't remember the third one. So, but on the customer service point, and the reason where I'm getting to participation in this, is that people don't like talking to robo-advisors. People want to feel that they're talking to real people. People want to, even if it's on a chat-based system, want to feel like they're having a real conversation. So the question I put to this Middle Eastern government the last time is, you're not going to change attitudes towards women in the Middle East tomorrow. It's going to take a long time. It's going to take you much longer than changing your employment programs. But why can you not use technology to increase their participation? Why can you not use women who are native speakers of Arabic to work out of whatever situation, either their home or in centers, where they can be the customer service arm, who are the native speakers? And they are whoever the hell they are, they say online, right? And this is the thing. This is the interesting vector, is yes, there are jobs that are disappearing, but the opportunity to bring non-traditional members into the workforce, and in the case of the Middle East, unfortunately, those non-traditional members are women, is something that becomes apparent now. Because what we have is it's a revolution in not just technology, but connectivity. The ability to be ubiquitously connected and be able to apply that to a gainful end.